Jeff, we need to recalibrate into next year. As John Farrell mentions, we need more data, but this seems to be one sigh of relief. Equity's up. How does the bond market have a sigh of relief?
Well, it's a sigh of relief, Tom, because you had a lot of expectations really following the Jackson Hole speeches, both by Powell and Schnabel, that were very hawkish with regards to central banks, definitively stating that they were focused on inflation. And so the setup going into today was a little bit skewed to the downside, that if it was a stronger report, that would have only solidified expectations for the 75 basis points in September. And if it was a significantly weak report, then the market might have looked through that, as opposed to what we've seen, in the last couple of payroll reports, particularly over this summer rally. It had been a market that, hey, if we got bad news is good news. And it may no longer be the case that bad economic news and slowdown is really going to push the Fed off of its tightening cycle, because they've been so clear to tell us it's really about inflation. So I think the look through for today, Tom, is really about what does the report signal about any kind of inflation look through. And I think the labor force participation rate number is really the key takeaway that is the most interesting piece, as you discussed a minute ago with Randy, which is, a little bit better than expected news there, a little bit weaker than expected on the wage front. Modestly, that's good news from the bond market perspective of not having to see the Fed really react to inflation maybe as strong. Again, one data point, we're not going to overread that, but that's the one takeaway I would have from this report that I think is important, is the look through to inflation.
Okay, so I'll be in danger of overinterpreting one data point then, Jeff. With that participation rate, we've seen Fed swaps showing a pairing of bets on rate increases. Does it make sense then to expect less hiking from the Fed? And in what sense? Less hiking in the near term, or less hiking overall? Less hiking next year? What do we think?
Yeah, it's definitely about the near-term trajectory. I think what you're seeing in the markets today is about, the 75 versus 50 debate. Today's number, maybe pushes back a bit, and that's why you're seeing the rally in the front end of interest rates. But let's not overinterpret, again, one data point. This isn't really going to significantly change the trajectory of the Fed, and the terminal rate debate is still very much unsettled. And today's labor market report isn't really going to settle that debate. We're going to focus a lot more on the inflation and the inflation trajectory. A minute ago, Mike McKee mentioned some of the housing numbers. This is one of the big challenges here that we're seeing, is a huge transition from home ownership. Yeah. To home renting, and that rental price is a huge component of that inflation outlook. Right. So those things are not really being addressed here on this labor market report, and that still faces the market still faces that uncertainty.